Think and Trade Like a Champion by Mark Minervini, book summary in English. Hey PowerBooks crew, are you ready to elevate your trading game from inconsistent results to becoming a true market champion? What if you could learn the exact mindset, strategies, and execution tactics used by one of America's most successful traders? Today, we're tearing into Think and Trade Like a Champion by the legendary Mark Minervini. Minervini isn't just an author, he's a multiple U.S. investing champion who's consistently achieved jaw-dropping returns. In this book, he doesn't hold back, laying out his entire SEPA methodology, his proven system for identifying and profiting from leading stocks. This isn't about guesswork, it's about precise timing, meticulous risk management, and cultivating the winning psychology of an elite performer. Get ready to discover how to select the absolute best stocks, time your entries and exits with surgical precision, protect your capital like a pro, and develop the mental fortitude that separates the champions from the crowd. If you're tired of mediocrity and ready to transform your trading into a high-performance pursuit, then you're in the right place. Hit that like button, subscribe to PowerBooks if you haven't already, and let's unlock the secrets to thinking and trading like a champion. Part 1. My Philosophy, Principles, and Foundational Concepts. Chapter 1. The Making of a Champion Trader. In this foundational chapter, The Making of a Champion Trader, Mark Minervini immediately establishes a powerful premise: that extraordinary trading success is not a matter of luck or innate talent, but a skill that can be systematically learned and mastered. He dismisses the common perception of trading as gambling and instead frames it as a disciplined profession, akin to elite sports, where champions are forged through consistent practice, meticulous preparation, and a relentless pursuit of improvement. Minervini shares insights from his own journey, emphasizing that his record-breaking returns were the result of a structured approach, not random market calls. Minervini introduces the idea that a champion trader focuses heavily on controlling the variables within their influence: risk management, precise entry and exit timing, and developing a robust trading system. He argues that true mastery comes from developing a deep understanding of market dynamics, recognizing high-probability setups, and crucially, aligning one's psychology with objective trading rules. The chapter sets the stage for his Superperformance methodology, suggesting that by adopting the mindset and practices of top performers, any dedicated individual can significantly elevate their trading results. It's a call to action to treat trading as a serious business, requiring dedication, continuous learning, and a commitment to personal accountability, rather than a speculative pastime. Key takeaways. 1. Trading as a masterable skill. Minervini asserts that elite trading is a learned skill, not dependent on luck or inherent talent, and can be systematically mastered through discipline and practice. 2. Control the controllables. He emphasizes focusing on aspects within a trader's control: risk management, precise timing, and adherence to a proven system. 3. Professional mindset. The chapter advocates for treating trading as a serious profession, demanding meticulous preparation, continuous improvement, and a commitment to personal accountability. 4. Foundation for Superperformance. It introduces the concept that adopting the mindset and practices of champion traders is the bedrock for achieving superperformance in the markets. Chapter 2. The Core Elements of My Approach. In this pivotal chapter, The Core Elements of My Approach, Mark Minervini meticulously lays out the fundamental principles that underpin his highly successful trading methodology. After emphasizing the importance of a champion mindset, he now provides a clear overview of what he actually looks for in a trade. Minervini's approach is a potent blend of technical analysis and fundamental analysis, designed to identify superperformance, stocks poised for significant price appreciation. He introduces the concept of his proprietary SEPA, Specific Entry Point Analysis methodology, which is far more than just picking a stock. It's a comprehensive process for trading market leaders with optimal timing and risk control. Key elements discussed include trend following. Minervini is a devout trend follower, emphasizing trading with the prevailing market trend, particularly focusing on stocks in strong uptrends, often characterized by specific moving average configurations like his trend template. Relative strength. He seeks stocks that are outperforming the broader market, signaling institutional accumulation and leadership. Strong fundamentals. While a technical trader, Minervini insists on a solid fundamental backdrop, looking for accelerating earnings and sales growth and robust profit margins. Volatility contraction patterns, VCP. He hints at or introduces the idea of specific chart patterns where volatility contracts, indicating a consolidation before a significant price breakout. Risk management integration. Minervini underscores that stringent risk management, including precise stop-loss placement and position sizing, is not a separate consideration, but an integral part of every trade decision from the outset. This chapter sets the stage for the detailed breakdown of each of these elements, providing the reader with a clear understanding of Minervini's disciplined, systematic, and high-probability trading philosophy. Key takeaways. 1. Blended approach. Minervini's core methodology combines a meticulous blend of technical, chart patterns, trend, relative strength, and fundamental analysis, earnings, sales growth. 2. SEPA Methodology overview. He introduces his specific entry point analysis, SEPA, as a comprehensive framework for timing and trading market-leading stocks. 3. Focus on trend and relative strength. A key principle is trading with the prevailing trend and selecting stocks that demonstrate superior relative strength compared to the broader market. 4. Integrated risk management. The chapter highlights that rigorous risk management, including precise stop losses, is a foundational and inseparable component of his trading approach. Chapter 3. Superperformance and the SEPA Methodology. In this crucial chapter, Superperformance and the SEPA Methodology, Mark Minervini dives deep into the heart of his proprietary trading framework, explaining how it enables him to achieve what he terms superperformance, returns that significantly outperform market benchmarks and even top fund managers. He defines superperformance not just as profitability, but as the ability to consistently generate exceptional, multi-bagger gains by focusing on a select few leading stocks. The core of achieving this, he reveals, lies within his SEPA, specific entry point analysis methodology. Minervini explains that SEPA is a comprehensive, rule-based system designed to identify optimal entry points in stocks that possess the highest probability of initiating large, sustained uptrends. Key components of SEPA include strong uptrend identification, rigorously confirming the stock is in a dominant uptrend using his trend template, specific criteria involving moving averages. Leading relative strength, pinpointing stocks that are significantly outperforming the broader market, indicating institutional demand. Volatility contraction patterns. This is a hallmark of his method, where he looks for chart patterns that show a clear decrease in price volatility and volume during a consolidation phase, signaling supply absorption and readiness for a breakout. Precise entry timing. SEPA aims to get into a stock at the optimal moment, often as it breaks out from a VCP base on strong volume, to minimize risk and maximize the potential for an immediate, powerful move. Integrated risk control. Every SEPA setup includes predefined stop-loss points to protect capital, ensuring that risk is managed meticulously from the outset. By combining strong fundamentals with identifiable technical patterns and strict risk management, SEPA is designed to capture explosive moves in leading stocks, turning objective analysis into systematic superperformance. Key takeaways. 1. Defining superperformance. Minervini explains superperformance as achieving exceptional, market-beating returns by systematically identifying and trading leading stocks. 2. SEPA as core method. The chapter details his proprietary SEPA, specific entry point analysis methodology, as a comprehensive, rule-based system for high-probability trading. 3. Key SEPA components. It highlights essential elements like strong uptrend identification, leading relative strength, and particularly volatility contraction patterns, VCPs, for precise entries. 4. Optimal entry and risk control. SEPA focuses on timing entries at the point of least resistance, breakouts from VCPs, while integrating strict risk management from the start. Chapter 4. Stage analysis and trend trading. In this chapter, stage analysis and trend trading, Mark Minervini delves into a foundational concept for identifying high-probability trading opportunities: stage analysis, a methodology popularized by Stan Weinstein. Minervini emphasizes that understanding a stock's current stage within its long-term price cycle is crucial for aligning your trades with the path of least resistance. He outlines the 4 distinct stages a stock typically undergoes. Stage 1, base, a period of consolidation after a downtrend. Stage 2, advancing uptrend, the ideal stage for long positions, characterized by higher highs and higher lows with rising key moving averages. Minervini only buys stocks in this stage. Stage 3, top distribution, a topping phase after an extended uptrend, often sideways and volatile. Stage 4, declining downtrend, a sustained downtrend with lower lows and lower highs. Minervini highlights that his trend template is an objective set of criteria, often involving the specific relationship and direction of the 50-day, 150-day, and 200-day moving averages, designed to confirm a stock is definitively in a Stage 2 uptrend. He stresses the fundamental principle of trading with the trend, arguing that attempting to profit in other stages, especially Stage 4, drastically reduces probabilities and increases risk. By rigorously filtering for stocks exhibiting confirmed Stage 2 characteristics and robust relative strength, traders can position themselves to participate in the most significant and sustainable price moves, significantly increasing their odds of achieving superperformance. Key takeaways. 1. Stage analysis as foundation. Minervini introduces Stan Weinstein's stage analysis, explaining the 4 distinct phases of a stock's price cycle. 2. Focus on Stage 2 uptrends. He asserts that he only buys stocks in confirmed Stage 2 uptrends, as this is the most favorable condition for significant price appreciation. 3. The trend template. The chapter details Minervini's objective trend template based on moving average relationships for precisely identifying a strong Stage 2 uptrend. 4. Trading with the path of least resistance. The core message emphasizes that aligning trades with the prevailing long-term trend, Stage 2, is crucial for maximizing probabilities and potential gains. Part 1. My Philosophy, Principles, and Foundational Concepts. Chapter 5. My Complete Buy Setup Checklist. In this highly practical chapter, My Complete Buy Setup Checklist, Mark Minervini consolidates all the foundational concepts discussed in Part 1 into a definitive, actionable guide for identifying high-probability trading opportunities. He emphasizes that a systematic checklist is indispensable for disciplined trading, as it removes emotion, ensures consistency, and prevents overlooking critical criteria that lead to superperformance setups. This checklist is a powerful filter, forcing traders to be selective and only consider the best opportunities. Minervini's comprehensive buy setup checklist meticulously integrates all the elements of his SEPA methodology. Key components he details for every potential trade include: Stage 2 uptrend, confirmation that the stock is in a healthy Stage 2 uptrend using his trend template. Leading relative strength, the stock must exhibit superior price performance compared to the overall market. Strong fundamentals, underpinning the technical picture with accelerating earnings and sales growth, signifying a quality company. Industry and sector strength. The stock should belong to a leading industry group and strong sector. Volatility contraction pattern, VCP. The chart must display a well-defined VCP or similar base pattern, indicating institutional accumulation and reduced supply. Volume characteristics. Specific volume patterns during the base formation and, crucially, on the potential breakout. Define pivot point, a clear, identifiable price level marking the ideal buy point for the breakout from the base. Favorable risk-reward, the setup must allow for a tight initial stop-loss, defining a small, acceptable R unit of risk. By adhering strictly to this multifaceted checklist, Minervini ensures that only stocks exhibiting the highest potential for explosive moves, those showing a compelling composite picture of strength, are considered for entry, transforming stock selection into an objective and repeatable process. Key takeaways. 1. Systematic approach. Minervini provides a comprehensive, objective checklist to guide stock selection, removing emotion and ensuring consistent identification of high-probability setups. 2. Integration of core principles. The checklist synthesizes all prior concepts, including Stage 2 trend, relative strength, strong fundamentals, and industry leadership. 3. VCP and pivot point focus. It emphasizes the critical role of volatility contraction patterns, VCPs, and precise pivot points as key indicators for optimal entry. 4. Strict filtering for quality. The core message is that rigorous adherence to this checklist enables traders to filter for only the highest quality, most promising setups with favorable risk-reward profiles. Part 2. Essential elements of my approach. Chapter 6. Stock selection, finding the best of the best. In this crucial chapter, Stock Selection, Finding the Best of the Best, Mark Minervini moves beyond the general principles to meticulously detail the precise process he employs to identify the highest quality stock candidates for his Superperformance trades. He emphasizes that finding these elite opportunities isn't about luck, but about a rigorous, multifaceted screening process that combines the most compelling technical and fundamental characteristics. This chapter is about becoming a stock detective, systematically uncovering companies with true explosive potential. Minervini explains that he focuses exclusively on market leaders, stocks that are outperforming their peers and the broader market, as these are the ones most likely to deliver exceptional returns. His selection process heavily weighs on superior fundamentals. He looks for accelerating quarterly earnings per share, EPS, and sales growth, strong profit margins, and high return on equity. This ensures the company has robust underlying business strength. Leading relative strength, RS. The stock's price performance must be demonstrably better than most other stocks in the market, often requiring an RS rating of 70 or higher, or equivalent strong outperformance. Industry and sector leadership. The best of the best stocks are almost always found in the leading industry groups and sectors. He emphasizes identifying these strong areas first. Instituship, while not directly quantifiable on a screen, he looks for the technical footprints of institutional accumulation, such as increasing volume on up days and decreasing volume on down days. Price and volume action. He reiterates the importance of stocks being in a Stage 2 uptrend, as defined by his trend template, and within a reasonable proximity to their 52-week highs, indicating sustained buying pressure. By combining these stringent fundamental and technical filters, Minervini systematically narrows down the universe of thousands of stocks to a manageable handful of high-conviction candidates, ensuring he's always focusing his energy on opportunities with the highest probability of delivering super performance. Key takeaways. 1. Rigorous screening. Minervini employs a disciplined, multifaceted screening process to identify only the absolute best stock candidates, rather than relying on intuition or speculation. 2. Focus on market leaders. He emphasizes buying stocks that exhibit clear leadership in terms of both price performance, relative strength, and fundamental strength, accelerating earnings sales. 3. Fundamental and technical synergy. The chapter details how he combines robust fundamental criteria, example, strong EPS growth, with precise technical indicators, example, Stage 2 trend, volume, for optimal selection. Industry group importance. A crucial filter is identifying stocks that are part of leading industries and sectors, as these groups often contain the market's biggest winners. Part 2. Essential elements of my approach. Chapter 7. Charting for Profit, Mastering the Visual Cues. In Charting for Profit, Mastering the Visual Cues, Mark Minervini shifts focus to the art and science of reading stock charts, which he considers an indispensable skill for precise entry and exit timing. He views charts as the visual language of supply and demand, revealing the footprints of institutional money and indicating when a stock is ready for a significant move. This chapter is dedicated to teaching traders how to interpret price and volume action to identify high-probability setups. Minervini elaborates on his signature volatility contraction pattern, VCP, providing detailed visual examples of how these bases form. He explains that a VCP is characterized by a series of contractions in the stock's price range, typically over several weeks or months, which indicates a healthy consolidation where weak hands are shaken out and institutional accumulation occurs. He also details the importance of volume, how volume confirms price action, particularly looking for drying up volume on pullbacks within a base, indicating lack of selling pressure, and surging volume on breakouts, confirming institutional demand. Visualizing the trend template, how to visually confirm a stock's stage 2 uptrend by observing the relationship and direction of key moving averages. Example, 50-day, 150-day, 200-day MAs on the chart. Reading relative strength, RS. How to interpret the RS line, which shows a stock's performance relative to the broader market as a crucial indicator of leadership. Identifying the pivot point, the exact price level where a stock breaks out from a VCP base, which serves as Minervini's precise buy point. He stresses the need for patience to wait for this exact moment. By mastering these visual cues, traders can systematically identify stocks that are poised for explosive moves, allowing for low-risk entries and participation in powerful trends. Key takeaways. 1. Charts as a visual language. Minervini teaches how to interpret price and volume charts as a direct representation of supply, demand, and institutional activity. 2. Detailed VCP explanation. The chapter provides an in-depth visual guide to volatility contraction patterns, VCPs, explaining their characteristics and significance for precise entry. 3. Volume and trend confirmation. It emphasizes using volume to confirm price action. Example, low volume on pullbacks, high volume on breakouts, and visually applying the trend template for stage 2 confirmation. 4. Identifying the pivot point. The core message is mastering the visual identification of the exact pivot point, breakout price, from a VCP base for optimal, low-risk entry. Chapter 8. Entry Points. Precise timing is critical. In this pivotal chapter, Entry Points, precise timing is critical. Mark Minervini shifts from identifying potential setups to the surgical execution of the buy decision. He strongly emphasizes that while finding a great stock with a solid fundamental and technical backdrop is essential, it's the precision of your entry point that dramatically impacts your risk, initial exposure, and the probability of immediate success. A sloppy entry, he argues, can turn an otherwise promising setup into a frustrating or losing trade. Minervini elaborates on the concept of the pivot point, the precise price level where a stock is expected to break out of a volatility contraction pattern, VCP, or other constructive base. This pivot point serves as the trigger for his buy. He details how to confirm a valid breakout, stressing the crucial role of volume confirmation. A true breakout should occur on significantly increased volume, often 2x to 5x average daily volume or more, as the stock clears the pivot point and pushes higher. This surge in volume indicates strong institutional demand, confirming the breakout's validity. He also discusses the line of least resistance. Entering at the pivot allows you to catch the stock just as it moves into a zone of minimal overhead supply, maximizing the potential for an immediate move. Avoiding false breakouts. Minervini provides insights into distinguishing genuine breakouts from head fakes or failed moves, often by analyzing intraday price action and the strength of the close. Order placement. Discussing the practicalities of placing buy orders, e.g., limit orders just above the pivot, or market orders for fast-moving stocks, to ensure you get filled near the optimal price. The psychology of the trigger. He addresses the emotional discipline required to wait patiently for the precise pivot point and then execute the trade without hesitation or fear of missing out. By mastering the art of precise entry timing, traders can dramatically reduce their risk per trade, improve their batting average, and position themselves for the explosive moves characteristic of superperformance stocks. Key takeaways. 1. Precision is paramount. Minervini stresses that precise entry timing is critical for minimizing risk, optimizing immediate trade performance, and improving overall profitability. 2. The pivot point trigger. The pre-identified pivot point from a VCP or base is the exact buy trigger, representing the point of least resistance for a breakout. 3. Volume confirmation is key. A valid breakout must be confirmed by a significant surge in volume, indicating strong institutional demand and lending credibility to the move. 4. Strategic execution. The chapter covers the practicalities of order placement and the psychological discipline required to patiently wait for and execute at the optimal entry, avoiding impulsive actions. Chapter 9, Stop Loss Rules, Protecting Your Capital. In Stop Loss Rules, Protecting Your Capital, Mark Minervini drives home one of the most critical principles of his entire trading methodology: the absolute non-negotiable importance of cutting losses quickly. He unequivocally states that the primary goal of any trader is to protect their capital, as this is the foundation for long-term survival and compounding wealth. For Minervini, a stop-loss is not merely a suggestion, but a predefined insurance policy that must be honored without exception. He details that every single trade must have a maximum predetermined risk before entry. Typically, Minervini advocates for very tight stop-losses, often within a range of 5 to 10% from the exact buy point, and sometimes even tighter, like 3 to 5% for the most precise entries. This small percentage risk per trade is crucial because it limits the damage from any single losing trade, allowing the trader to absorb numerous small losses without significant capital impairment. Minervini stresses the R multiple. He reinforces the concept of the R unit, risk unit. Your stop loss defines your 1R. Keeping this 1R small is paramount. Placement strategy. Stop losses are placed at a logical point where the original trading setup is invalidated. Example, just below the low of the breakout day or below a key support level in the base. No hope, no hesitation. The most difficult but vital rule is the unwavering discipline to execute the stop loss immediately once the price hits it. Emotions like hope, fear, or stubbornness are the enemy of capital preservation. He likens small losses to the cost of doing business, a necessary expense to find the big winners. Hard stops over mental stops. He strongly recommends using hard, system-placed stop-loss orders rather than relying on mental stops, which are far too easily ignored under pressure. This chapter underscores that consistent profitability is achieved not by avoiding losses entirely, but by rigorously limiting them, thereby preserving precious capital to participate in the large, winning trades that ultimately drive superperformance. Key takeaways. 1. Capital protection is paramount. Minervini emphasizes that protecting capital through strict stop-loss rules is the single most important factor for long-term trading survival and success. 2. Predefined tight stops. Every trade must have a maximum predetermined risk, typically 5 to 10% from the buy point, established before entry, with the stop-loss placed at a logical invalidation point. 3. Unwavering discipline. The chapter stresses the absolute necessity of executing the stop-loss without hesitation or emotion once the trigger price is hit, regardless of personal feelings. 4. Cost of doing business. Small losses are framed as an acceptable and necessary part of trading, preventing catastrophic drawdowns and preserving capital for future opportunities. Chapter 10. Position Sizing, Managing Risk Like a Pro. In Position Sizing, Managing Risk Like a Pro, Mark Minervini reveals what he considers to be the most critical component of risk management and long-term trading success, even more vital than the exact entry or stop-loss placement itself. This chapter provides the quantitative framework for determining how many shares to buy in any given trade, ensuring that no single loss, even if a stock hits its stop-loss, will significantly damage a trading account. Minervini emphasizes that proper position sizing is the ultimate control a trader has over their risk exposure and is fundamental to achieving consistent superperformance. He clearly lays out the formula for calculating position size, which is based on the trader's defined risk per trade, typically a small percentage of total capital, such as 1% or 2%, and the specific dollar risk of the trade, the distance from the entry price to the predetermined stop-loss, which defines your 1R unit. The calculation ensures that regardless of the stock's price or its volatility, the actual dollar amount risked on any single trade remains consistent and acceptable. Key points covered include controlling the R unit, reinforcing that the stop-loss determines the 1R, and position sizing ensures that this 1R represents a tiny, manageable fraction of total trading capital. Adapting to volatility. More volatile stocks with wider stop-loss distances require smaller position sizes to keep the dollar risk constant. Conversely, tighter setups allow for larger share counts. This prevents inadvertently taking on too much risk, simply because a stock is cheap or moves a lot. The power of compounding. By consistently taking small, controlled risks, even with a relatively modest win rate, the compounding effect of larger winners over time can lead to exponential growth, while large losses are avoided. Avoiding catastrophic loss. Minervini stresses that ignoring position sizing is a common trap that can lead to rapid account ruin, even for traders with otherwise good stock-picking skills. Emotional discipline. The chapter implicitly and explicitly addresses the emotional challenge of sticking to calculated position sizes, especially when overconfidence or fear of missing out tempts a trader to overbet on a sure thing. Ultimately, this chapter provides the quantitative tools necessary to manage portfolio risk systematically, ensuring that a trader remains in the game long enough to let their winning strategy compound into significant wealth. Key takeaways. 1. Position sizing as ultimate risk control. Minervini asserts that correctly calculating position size is the most crucial element of risk management, determining the precise dollar amount risked per trade. 2. Formula for calculation. He provides the method to calculate share size based on a fixed percentage of capital risk per trade and the defined dollar risk 1R from entry to stop loss. 3. Adapting to volatility. Proper position sizing accounts for a stock's volatility. More volatile stocks necessitate smaller share counts to maintain consistent dollar risk. 4. Ensuring longevity and compounding. By rigorously controlling risk per trade, position sizing protects capital from large losses, enabling consistent compounding and long-term survival in the markets. Part 3. Psychology, Trading Tactics, and Advanced Concepts. Chapter 11. The Psychology of Winning. In The Psychology of Winning, Mark Minervini pivots to what he considers the ultimate differentiator between consistent winners and everyone else: the mental game. Having outlined his precise methodology in previous chapters, he now emphasizes that even the most robust system is useless without the unwavering discipline and correct mindset to execute it flawlessly. Minervini asserts that trading success is primarily a self-created outcome, a direct result of one's beliefs, attitudes, and emotional control, rather than external market factors or luck. He delves into key psychological principles essential for a champion trader. Personal responsibility, taking full ownership of all trading outcomes, whether positive or negative. Blaming the market, news, or others is a surefire path to failure. Belief system, cultivating empowering beliefs about one's ability to succeed and the probabilistic nature of trading. Your trading results will rarely exceed your deepest self-image. Emotional detachment, the critical ability to make decisions based on objective rules rather than fear of loss, of missing out, greed, or hope. Emotions are the primary sabotaging factor in trading. Acceptance of loss, viewing small losses not as failures, but as an inevitable and necessary cost of doing business to protect capital and find the big winners. The willingness to be wrong quickly is paramount. Patience and discipline, the mental fortitude to wait for only the highest quality setups and to stick to predefined rules for entry, stop loss, and position sizing, even when tempted to deviate. Process over outcome, focusing solely on executing the trading process correctly, trade after trade, rather than becoming fixated on the outcome of any single trade. This detachment helps manage emotions and builds consistency. Continuous improvement, embracing mistakes as valuable feedback and learning opportunities rather than sources of discouragement. This fosters adaptability and long-term growth. Minervini makes it clear that the journey to superperformance involves a profound internal transformation where mental mastery complements methodological prowess, allowing a trader to consistently operate at an elite level. Key takeaways. 1. Mindset is paramount. Minervini stresses that trading success is fundamentally a psychological game, with the right mindset being the ultimate differentiator between winning and losing. 2. Personal responsibility and empowering beliefs. Champion traders take full responsibility for their outcomes and cultivate strong self-belief, aligning their actions with a winning identity. 3. Emotional control and loss acceptance. The chapter emphasizes the critical importance of emotional detachment, patiently adhering to rules, and accepting small losses as an essential part of the trading business. 4. Process-oriented focus. Success comes from consistently executing a well-defined process, not from emotional reactions or fixation on individual trade outcomes. Chapter 12. Advanced Trading Tactics. In Advanced Trading Tactics, Mark Minervini moves beyond the foundational buy and sell rules to reveal the more nuanced strategies he employs to maximize profits and manage positions in dynamic market conditions. This chapter focuses on refining trade management to extract the most out of winning positions and adapt to various scenarios that arise after an initial entry. It's about optimizing performance once a trade is underway. Minervini elaborates on several sophisticated tactics, including adding to winners pyramiding, a cornerstone of his strategy. He details how to add to existing winning positions, typically on subsequent breakouts from smaller constructive bases, often called reaccumulation or flag patterns. This allows a trader to build a larger position in a leading stock that is showing continued strength, significantly magnifying potential profits. He stresses adding only to profitable trades, never averaging down on losers. Optimal exit strategies beyond initial stop loss. While the initial stop loss is for cutting losses, this chapter explores how to take profits and protect gains. This might include trailing stops, using moving averages, e.g. the 10-day or 21-day MA, as dynamic trailing stops to stay with a trend as long as it's intact, but exit when momentum breaks. Volume climax selling. Recognizing signs of exhaustion or climax tops, e.g., extremely high volume on wide price swings, often on the downside, or a sharp reversal, as potential selling signals. Profit targets. While he generally lets winners run, he might discuss taking partial profits at specific multiples of his initial risk, R multiples, or at major resistance levels. Managing gaps. How to react to stocks gapping up significantly, especially after earnings. When to hold, when to take partial profits, or when a gap might signal an overextended move. Overall market exposure. Understanding when to increase or decrease total market exposure based on the health of the general market. In a strong bull market, one might run a full book, while in a weak market, scaling back cash levels is crucial. Managing portfolio concentration. While he advocates for concentration in the best ideas, he also touches on diversifying across different leading industry groups to reduce single stock or single sector risk. These advanced tactics are designed to enhance a trader's ability to maximize returns from winning trades and skillfully navigate the complexities of ongoing market action, ensuring they capitalize on their meticulously chosen opportunities. Key takeaways. 1. Adding to winners, pyramiding. A core advanced tactic is to add to profitable positions on subsequent constructive breakouts, building larger stakes in leading stocks to amplify gains. 2. Dynamic profit protection. Minervini discusses various methods for protecting profits and exiting trades, such as using trailing stops, example, moving averages, and recognizing climax volume. 3. Market exposure management. The chapter highlights the importance of adjusting overall market exposure and portfolio concentration based on prevailing market conditions. 4. Tactical adaptability. It covers how to react to specific events like price gaps and when to consider taking profits based on market behavior rather than just preset targets. Chapter 13. Paper Trading and Real-Time Practice. In Paper Trading and Real-Time Practice, Mark Minervini addresses the crucial phase of skill development that bridges theoretical knowledge with actual market execution. He asserts that while understanding his SEPA methodology is vital, mastery truly comes through consistent, deliberate practice. This chapter emphasizes that becoming a champion trader is akin to training for a professional sport. It requires rigorous, hands-on application to build muscle memory, develop intuition, and fine-tune execution under varying conditions. Minervini strongly advocates for paper trading, simulated trading, as the initial, indispensable step. He outlines how to approach paper trading effectively, by treating it with the same seriousness and discipline as real money, meticulously recording every trade and analyzing the results. The goal is not just to see hypothetical profits, but to perfect the process, adhering to buy rules, executing stop losses, and managing positions without the emotional pressure of financial risk. He acknowledges that paper trading has its limitations, primarily the absence of real emotional stakes, but it is essential for solidifying system understanding and identifying mechanical errors. Following successful paper trading, Minervini recommends a gradual transition to real-time practice with very small position sizes, e.g., risking a fraction of a percent of capital or trading just a single share. This introduces actual financial and emotional pressure in a controlled environment, allowing traders to experience the psychological challenges firsthand while keeping potential losses minimal. Throughout this practice phase, he stresses the non-negotiable importance of meticulous record-keeping and journaling, documenting not only trade statistics, but also psychological states, rationalizations, and lessons learned. This self-analysis is critical for identifying and correcting weaknesses, ultimately building the consistency and confidence required to trade effectively with larger capital. Key takeaways. 1. Practice is essential for mastery. Minervini emphasizes that applying trading knowledge through consistent, deliberate practice, like a professional athlete, is crucial for developing the skills to become a champion trader. 2. Effective paper trading. He advocates for simulated trading to build confidence, internalize system rules, and refine execution mechanics in a risk-free environment, treating it as seriously as live trading. 3. Gradual transition to live trading. The chapter recommends a phased transition to real money, starting with very small position sizes to introduce emotional stakes while minimizing financial risk. 4. Meticulous record-keeping and self-analysis. Throughout the practice phases, comprehensive journaling of trades and psychological states is vital for identifying weaknesses, correcting mistakes, and fostering consistent execution. Chapter 14. Mistakes and Lessons Learned. In Mistakes and Lessons Learned, Mark Minervini offers invaluable insights drawn from his own extensive trading career, emphasizing that even champion traders make mistakes, but their consistent success stems from their ability to objectively learn from them. He views errors not as failures, but as essential feedback loops for continuous improvement. This chapter provides a frank discussion of common pitfalls that can derail a trader, alongside the crucial lessons required to overcome them and evolve into a disciplined professional. Minervini outlines several prevalent trading mistakes that lead to significant losses and inconsistency. Failing to cut losses quickly. This is presented as the cardinal sin of trading. Holding on to losing positions out of hope or stubbornness is a guaranteed path to catastrophic drawdowns. Minervini reiterates his mantra, being wrong is acceptable, but staying wrong is totally unacceptable. Averaging down on losers, compounding a mistake by adding to a losing position, which only increases risk and potential damage. Lack of a defined trading plan. Trading without clear rules for entry, exit, and risk management leads to impulsive, emotional decisions. Emotional trading, allowing fear of missing out, of losing, greed, or revenge to dictate trading actions rather than adhering to objective rules. Not doing proper homework, failing to thoroughly research stocks, fundamentals, technical patterns, industry group before entering a trade. Overtrading or undertrading, deviating from calculated position sizes or forcing trades when no high-probability setups exist. Ignoring the general market, trying to fight a broad market downtrend, which significantly reduces the odds of individual stock setups working. Minervini stresses that the key to learning from these mistakes lies in meticulous post-analysis and journaling. Traders must objectively review every trade, especially losing ones, to identify the precise error, understand the psychological trigger, and then implement specific rules or adjustments to prevent recurrence. By embracing mistakes as learning opportunities and committing to rigorous self-correction, traders can systematically refine their approach, reinforce discipline, and build the resilience necessary for long-term superperformance. Key takeaways. 1. Mistakes are inevitable. Learning is optional. Minervini asserts that all traders make mistakes, but the ability to objectively learn from them is what separates consistent winners. 2. Cardinal trading sins. He highlights common errors like failing to cut losses quickly, averaging down on losers, and trading without a defined plan as major destroyers of trading capital. 3. Objective self-analysis. The chapter emphasizes the importance of meticulously reviewing trades and journaling emotions thought processes to identify root causes of mistakes, rather than just blaming external factors. 4. Continuous improvement. By embracing mistakes as feedback and implementing new rules, traders can systematically refine their discipline and strategy, transforming errors into stepping stones toward mastery. Chapter 15. Living the Champion's Life. In the concluding chapter, Living the Champion's Life, Mark Minervini synthesizes all the principles and strategies discussed throughout the book into a powerful message about what it truly means to achieve and sustain super performance, extending beyond just trading hours. He emphasizes that becoming a champion trader is not merely about accumulating wealth, but about cultivating a disciplined, responsible, and continuously improving mindset that permeates all aspects of life. This chapter serves as a call to action to fully embrace the demanding yet ultimately rewarding journey of trading mastery. Minervini reinforces that true success in trading is a result of self-mastery and unwavering adherence to a proven process. He reiterates the core tenets that define a champion's approach: unwavering discipline, the consistent application of rules for entries, exits, and risk management, even when emotions suggest otherwise; personal responsibility, taking full ownership of all outcomes, eliminating excuses, and viewing mistakes as invaluable feedback for growth; continuous learning, the journey of a champion is never-ending. It involves constant self-analysis, adaptation to changing market conditions, and a relentless pursuit of improvement. The power of simplicity and focus. Champion traders avoid complexity, focusing on a select few, high-probability setups and mastering their chosen methodology. Integrity and respect for risk. Approaching trading as a serious business with integrity, prioritizing capital preservation above all else, and respecting the inherent risks of the market. Beyond the money. While financial freedom is a significant outcome, Minervini implies that the true reward lies in the personal growth, confidence, and discipline gained through mastering this challenging profession. Ultimately, living the champion's life is about embracing trading as a demanding yet profoundly transformative endeavor. It's a commitment to a lifestyle of continuous self-improvement, disciplined execution, and unwavering commitment to a winning process, culminating in the ability to confidently navigate the markets and achieve lasting success. Key takeaways. 1. Holistic champion mindset. Achieving super performance extends beyond trading mechanics to encompass a disciplined, responsible, and continuously improving mindset that influences all aspects of life. 2. Unwavering adherence to process. True trading success is a direct result of consistently executing a proven system and specific rules without emotional deviation. 3. Continuous learning and self-correction. The path to mastery is ongoing, requiring constant self-analysis, learning from mistakes, and adapting to evolving market conditions. Integrity, simplicity, and respect for risk. Champion traders prioritize capital preservation, focus on what works, avoid unnecessary complexity, and approach trading as a serious, disciplined profession. Wow, what an incredible journey we've just completed. We've delved deep into Mark Minervini's Think and Trade Like a Champion, and it's clear why this book is a game changer for anyone serious about mastering the markets. Minervini has shown us that super performance isn't about luck, it's about a precise, repeatable methodology. We've learned the critical importance of blending strong fundamental analysis with meticulous technical charting, specifically focusing on those high-probability volatility contraction patterns, VCPs, and Stage 2 uptrends. We've dissected his battle-tested strategies for exact entry points, ironclad stop-loss rules, and the power of smart position sizing to protect capital above all else. But perhaps most profoundly, this book has hammered home that the psychology of a champion is the ultimate differentiator. It's about discipline, emotional control, taking radical personal responsibility, and the invaluable ability to learn from every mistake. Minervini doesn't just give you a system. He gives you the mindset to execute it consistently, turn small losses into necessary tuition, and let your winners run to truly transform your trading account. This isn't just a book you read, it's a blueprint you apply. If you're ready to stop gambling and start trading like a professional to achieve that sustained super performance, then you absolutely must get your hands on this book. It's an indispensable guide for anyone aiming for the elite level. You can find Think and Trade Like a Champion by Mark Minervini available now. Check the link in the description below to pick up your copy. But don't stop here. For those of you who are ready to take on another challenge, another powerful book is popping up on your screen right now. It's a must-read and a must-listen to take your journey to the next level. Remember what we always say here at PowerBooks: knowledge is not power. The application of knowledge is power. So take these lessons, apply them with unwavering discipline, and go out there and build your champion's life. If you found this summary helpful, smash that like button, subscribe to PowerBooks for more deep dives into life-changing reads, and hit the notification bell so you never miss our next project. Until next time, keep thinking, keep growing, and keep conquering.